Hi, I'm John Mock, a Senior Managing Director at DigitalBridge. I lead our global data center practice, and I'm a member of the investment committee. And today, I'd like to talk to you about digital transformation, how it's impacting enterprises and consumers, how those powerful trends are driving exponential growth and data creation, and the related need for data center infrastructure on a global basis. In a few minutes, I'll hand it off to Mike Faust, one of the firm's senior advisors who will join us remotely. Mike, who I referred to as the godfather of data centers, was the founder of Digital Realty and its CEO, and serves as the chairman of two of our important data center businesses, DataBank and Vantage. I'll introduce you to those two businesses as well as some of our newer platforms. As you will hear, we are continuing to leverage our experience from prior investments to identify new opportunities. We leverage DigitalBridge's best practices across all of our businesses, and most importantly, we focus on our customers first, and we support them as they continue to scale. Let's start with a quick video to give you some perspective on what digital transformation means for businesses globally.
Digital transformation, the infusion of digital technology into the DNA of businesses across all industries, continues to drive growth in the digital economy. Harnessing the power of data is at the heart of these transformations. To put that into perspective, 90% of the world's data today was created in just the last 2 years. As this data becomes more valuable, where it resides, how it's transported, its security, and its availability become increasingly relevant. At the same time, enterprise workloads are becoming more mobile as software orchestration evolves, demanding the underlying infrastructure provides the same level of agility. Data lives across the core all the way to the edge. Today, it's not just a data center's megawatt capacity, it's the level of connectedness and fiber availability that creates value. These are the powerful forces driving demand for new data center capacity on a global basis, estimated to require $1.3 trillion in investment over the next 6 years to meet demand. For DigitalBridge, it's an addressable market of over $200 billion in revenue next year, doubling to $400 billion by 2025. We already operate some of the fastest growing data center businesses serving the world's leading web scale and cloud providers all the way to the edge. This is one of the most exciting areas of investment in digital infrastructure today, with new workloads and data mobility continuing to drive digital transformation forward.
Wow, a $1.3 trillion market opportunity. As you saw in the video, the volume of digital content or data is growing exponentially. Imagine that 90% of the world's data was created in the last 2 years alone. That growth is from consumers, enterprises, content and cloud platforms, and the universal migration of economic activity into a digital format. How that data is managed, delivered, stored, and processed are the fundamental questions we ask when we think about digital transformation. While energy fueled the last industrial economic boom, data is powering the new economy. However, unlike energy, data is not uniform. It has domain and is unique for every user. It may be confidential or personal. It may be limited by data sovereignty or strict rules that require data only to be stored in a specific country. This makes data much more difficult to manage and process. And unlike energy, it can be originated by anyone, anywhere, at any time. New social apps, new business models, the Internet of Things, when your refrigerator talks to the grocery store, all of these things create data. This growth further accelerates as more and more people, businesses, and devices are connected to the digital economy. Where and how data is being used is also rapidly evolving. Data has to be mobile and able to move between core and hyperscale locations, regional colocation facilities designed for enterprises, and the edge. The location of each application and how it's used will be driven by performance considerations, latency, and cost. For example, artificial intelligence, which requires massive amounts of data to be processed to drive better results, tends to be centered around large, consolidated data center locations. As another example, the cloud is expanding globally. We're seeing the rapid adoption of public and private clouds in new markets. As a result, we're seeing significant growth for data centers across Europe, Latin America, and Asia. On the other end of the spectrum, with the adoption of 5G and edge computing, data needs to be accessed in many disparate locations, not just in a consolidated single campus. This will accelerate with the continued adoption of the Internet of Things and the continued proliferation of smart devices. These are just a couple examples of the diverse workloads and unique compute environments that will be necessary to accommodate the increasing relevance and mobility of data serving consumers and enterprises alike. With that as background, I'll turn it over to Mike Faust to provide some perspective.
Thank you, John. I appreciate the new title. I much prefer being the godfather of data centers rather than the grandfather, so I quite like that. As John mentioned, I've been in the data center industry for over 20 years, since 2000. We've been developing, operating, and investing in data centers around the world in 14 countries on 4 continents. So I've had the great opportunity to see the evolution of our industry close up and personal. And I've had the great pleasure of working with Digital Colony and John since 2015. So it's been quite a great opportunity for me personally. In my experience, DigitalBridge's strategy of developing both our hyperscale platform as well as our complementary edge platform is a real significant advantage. This allows our business to focus on the key competitive strengths and market segments, while also leveraging the resources of the broader DigitalBridge community of companies and executives. We've already seen the benefits of this approach with the terrific success of DataBank and Vantage, and now with Scala in Brazil, and their ability to serve the broad range of customers. These customers are global players, including cloud services, technology, finance, and social media. And their requirements have been growing steadily, both in size, but also in sophistication. They need to work with strong data center providers who share their vision and who have the operational expertise and the scale to serve them across continents. With our large investment in operational excellence and in our world-class facilities, our companies have earned the confidence of these global players to allow us to partner with them in their dramatic growth. I've never seen stronger fundamentals in the data center sector than existed today, and that's after 20 years of tremendous growth. That growth includes the explosive expansion of cloud platforms and in all economic activity, including finance, social media, streaming, entertainment, retail, the whole gamut of what we do every day in our lives. And the increased focus of the edge to reduce latency and to deliver even new applications, many of which don't even exist today but will in the next 5 years. This is indeed a very exciting time to be building and growing our data center platforms around the world. And now I'd like to turn the program back to John.
Thanks, Mike. We continue to appreciate and benefit from your insights in the sector. We acquired the company in 2016, and shortly thereafter, Raul took over as the CEO. He has led DataBank to be a market leader, outperforming his peers in the sector with smart acquisitions and strong organic growth. Raul?
Hey, thanks, John. Thanks for having me today. I'm Raul Martynek. I'm the CEO of DataBank. Excited to tell you about the business. I've been in the communication sector, internet infrastructure sector for over 25 years. Actually, Mark Ganzi and I have been colleagues and associates for 20 of those years. In 2015, after he had started DigitalBridge, I joined the team there to work on the data center strategy. So I joined John Mauck and Mike Faust, and at the time we were formulating how to invest in the data center space, and we identified DataBank in early 2016 as a platform that we thought we could grow into a significant business. Mark's reputation and Ben's reputation is very well known within our sector. Obviously, they've had tremendous success. And I really was, enamored with the idea around the convergence of digital infrastructure, cell towers, small cells, fiber, data centers, and how those as a collective unit would kind of converge in the future. So it seemed like a super exciting opportunity, and I jumped at it. DataBank was a business that, we felt had a lot of really good traits. Number one, they had great customers. But that they had built up over a 5-year period. They had great facilities in the data center space. The asset quality is very important, and that's not just the data centers themselves, but also the customer contracts. And we felt that they also had kind of a demonstrated track record of operating and growing the business. what we saw was a business that, had expanded to 6 markets, but that, we could expand them into many, many more markets, which is what we've done over the last 4.5 years. DataBank was a company that obviously when we acquired it was a relatively small company. It was about 25 million of EBITDA, about 50 million of revenue. It's the same story in terms of, how do you take a business that from one level to the next. We identified some human talent that needed to come into the company, which we recruited and brought in. We also identified a number of acquisitions that we thought could expand the geography of the company, because geography is a very important aspect of servicing customers in the data center space. And then working with DigitalBridge, we were able to identify targets, underwrite those targets, raise the capital to acquire them, and also build out organically in these markets. So it's been a playbook that we've been using for 4.5 years and has culminated in kind of our largest transaction, which was the acquisition of 44 data centers from zColo. And now we are the largest private data center operator in the US, with 58 assets in 25 markets. And I believe very well positioned to take advantage of this next phase of internet infrastructure, which we call the edge. DigitalBridge has been our partner from the get-go. I mean, they have been, I've worked with many investors over my 25-year career, and they are hands down the most thoughtful, the most proactive, and the most value-add investor in the space. They not only know kind of the space, cold, but they also are very, very good at helping our portfolio companies execute on their strategy, execute on our capital formation. To give an example, we just completed the first ever a multi-tenant enterprise data center securitization in the space that created over 200 million of cash flow for the company over the next 5 years. And that's an effort we wouldn't have been able to get done without the help of DigitalBridge and their intense knowledge around the sector, and also kind of capital formation. So they've been helpful in so many ways. We talk on a weekly basis, multiple times, and they're really just a part of our team and help us advance our strategy. So I think we're really excited at DataBank over what's going to happen in the next 5 or 10 years. This kind of movement towards the edge is a real dynamic and really the next phase, the next evolution of internet infrastructure. With all these customers having to deploy more infrastructure in more markets, we think that our geography is going to give us a significant advantage in capturing that demand. So we are very busy working on our strategy there and ensuring that we are well positioned to meet that demand. And I think with DataBank, the platform that we have, and with our partnership with DigitalBridge, we're gonna do really well in the future. And with that, I'll turn it back to you, John.
Thank you, Raul. I'm excited about the success that DataBank has already shown, including the transformative acquisition and integration of zColo, and the future as DataBank continues to extend its leadership in North America. Now, let me introduce you to Sureel Choksey, the CEO of Vantage Data Centers. Vantage is the premier hyperscale data center platform in North America and now Europe. DigitalBridge acquired Vantage in 2017, and under the leadership of Sureel, the company has successfully expanded across North America and more recently into Europe to support continued customer demand. Let me pass it to Sureel to talk more about Vantage. Sureel, off to you.
Thanks, John, and hello, everyone. I'm really excited to be here today to spend a few minutes with you talking to you about this amazing journey of unprecedented growth that we've been on at Vantage Data Centers with our partners at DigitalBridge. I first met Mark Ganzi and John Mock and the DigitalBridge team about 5 years ago. Our former sponsor at Vantage was selling the company. And when we met Mark, John, and the team, we instantly clicked. What we were at the time was a regional provider. We had data centers in 2 markets, in Silicon Valley and in the Pacific Northwest. We had some strong hyperscale customer relationships and a reputation for operational excellence. But what DigitalBridge and we saw together was the opportunity to leverage that modestly sized regional hyperscale data center platform into something really special. And that's what we've done together over the course of the first 4.5 years of our partnership. First, we started by identifying expansion markets and opportunity to extend our platform from the Western US to a broader US play. That started with an expansion to Northern Virginia. Northern Virginia is both the world's largest and most important data center market, albeit a very competitive one. But DigitalBridge supported our efforts to acquire a greenfield site and ultimately build in a market which has proven to be very successful for us and strategically important for our customers. Next up was Canada. Back in late 2018, we were starting to see emerging signs of demand from our hyperscale customers north of the border. We were working on greenfield site selection efforts, which are very difficult in a new country, and in particular in the province of Quebec, where a different language, French, is the primary mode of communication. Just about that time, DigitalBridge introduced us to the parent company of a provider called 4 Degrees. They were thinking about selling their data center business at the time. They had a hyperscale tenant, they had 2 facilities, and ultimately, with DigitalBridge's support, we were able to execute on a proprietary M&A transaction to acquire into 2 markets and ultimately create a massive growth engine for Vantage and accelerate our time to market into Canada by about 2 years, which is really exciting. Next up was expansion internationally. But before we could do that, we had to start to think about how we could ensure that our investors had sufficient capital to be able to back Vantage to expand the business in a significant way beyond North America. We started working with DigitalBridge on a concept to bifurcate our North American business into what we now call DevCo versus SDC. A number of development assets that we're continuing to construct and lease for the benefit of our customers versus the stabilized assets in SDC. These are data centers that have been leased on a long-term basis, on a take-or-pay basis, to the who's who of the hyperscalers, who of course have phenomenal credit. We were able to structure a transaction whereby we divided that North American business into 2. And our existing investors, led by DigitalBridge, were able to sell a 90% interest in those stabilized assets to a new consortium of investors that ultimately, after a very competitive process, was won by Colony Capital, the parent of DigitalBridge. And so we were able to continue to work with partners who have been very good to us and give them a set of stabilized cash flows with very attractive characteristics. What that also did is it freed up and recycled capital to all of the Vantage investors, which enabled a major expansion effort into Europe. We initially developed a plan to invest greenfield across a handful of markets over a handful of years. But with DigitalBridge's support and partnership, we were able to accelerate that plan to expand to 6 markets within the first 18 months of operations, and also through an introduction that DigitalBridge made to the CEO of a company called Etix, acquire again on a proprietary basis a core asset in a hyperscale asset in Frankfurt with an anchor tenant hyperscaler that has since grown with us across multiple markets. So in total, we've been able to do 2 acquisitions in Europe, 2 acquisitions in North America. We now operate across 12 markets, soon to be several more than that, and we're a leading hyperscaler across each of those, investing more capital than any of our competitors. And we couldn't have done any of that, without the support and the partnership over the years with DigitalBridge. With that, I'd like to turn it back over to you, John.
Thanks, Sureel. Appreciate the overview of the company and the hyperscale market opportunity. The last company we'll discuss in the context of the digital transformation is Scala, our hyperscale business in Latin America. I believe this business is ideally positioned to support the growth of cloud and digital content in Brazil and across the region. The fantastic leasing in the first year suggests our thesis was correct. Let me introduce my colleague, Geneviève, who helped to lead the transaction, to tell you more. Geneviève?
Hi, I'm Geneviève Malte-Boisvert. I'm a principal at DigitalBridge, and I'm going to walk you through one of our new investments, Scala, a Brazilian hyperscale data center business we launched last year. It's a proprietary carve-out of data center assets from a large Brazilian internet media company. Scala is a business built to capitalize on the rapid growth and demand we're seeing for data center capacity in the region. In fact, DigitalBridge had been studying the Latin American data center market for years before we launched Scala. With strong regional adoption of cloud services and much of the storage and compute still managed out of the US, we saw significant pent-up demand from our customers, the large hyperscalers and cloud players, and a need for a strong player to serve the market. Latin America is generally undersupplied for data center capacity. As a result, we expect Scala's target metros to be the second fastest growing region for hyperscalers worldwide. What are we building at Scala? Scala is already the second largest hyperscale data center provider in Brazil, with expansion plans across Latin America driven by strong customer demand. The investment is well ahead of our underwriting plan just 1 year after launch. So how is DigitalBridge contributing to the growth of Scala? If I had to summarize, people, customer relationships, and strategic growth. People create alpha. It's one of our mantras. We assembled an experienced management team based in Brazil, led by Marcos Peio, the CEO, who was formerly with IBM, and supported by DigitalBridge's deep bench of operating partners with experience in the region. 2, leveraging the customer relationships across the DigitalBridge ecosystem and putting the customer first. How do we say yes to customers? In less than a year, we grew the megawatt lease capacity by 50%, completing the first 2 years of the sales plan within the first 8 months. How did we do that? First, by solving a unique and complex problem for one of our customers who needed to deploy capacity using a new network configuration in a short period of time. Second, by using ESG as a competitive advantage. Scala recently announced that it is now certified carbon neutral, the first Latin American data center company with 100% of power sourced from renewable energy, a key competitive advantage for customers who have set similar goals. Finally, growth. Focusing on expansion both organically and via accretive M&A. In order to meet customer demand, you need capacity at the right time and the right location. With that, I'll wrap up this overview of Scala. It's a great example of the DigitalBridge value-add playbook at work. Originating a proprietary idea, assembling a top-class management team, and supporting its growth with capital and operating expertise. Over to you, John.
Thank you, Geneviève. I'm excited about the business and the opportunity in Latin America. Let me finish this section by saying thank you to everyone that joined the conversation.